Okay, I think we'll go ahead and get started. Good afternoon. This is Bob Hilke, and welcome to our weekly Friday afternoon Q&A question for our strategic partners for Premier Alignment. So we had a question come up this week, so I'm going to share my screen because I want to share something that I think will help answer this question well. Okay, the question that we had was related to making referrals. And when we have our strategic partners sign their agreements, what we do is we onboard them with a shared folder with some documents that help them have enough information so they can be confident in making referrals or introductions to us. Um, and I want to emphasize that we don't expect our referral partners to become experts in healthcare or the consulting that we do, but we want to provide enough information so that what we do makes sense and so that you're confident enough in being able to talk about what we do to entice someone to make an introduction. And so one of the documents that we have, well, actually, there's a couple that I'm going to cover. Let's do this one first. Again, in this shared folder that you get when you sign your agreement to be a strategic partner with us, there's a number of documents. These are two of them. This first one is simply a template that you can use either for using a text message or sending an email to someone that you'd like to introduce to Tommy or to me. And you can always tweak it to, make it sound like you, put it in your words, whatever, but it's pretty straightforward and simple. Thinking of you because I felt this may be a huge asset to you and your company. I'd like to introduce you to a business associate who is helping CEOs take control over their largest expenses to help healthcare work for them. I think you should hear their story because it's unique and innovative. Can I tee up a 15-minute introductory call? I think that's all you need to do. Send that text message or that email and see how they respond. Um, so anyway, that's again just a suggestion, but if you're looking for a template to use, this is a good one to start with. But we also have this document in the folder. It's called referral information. And this is, again, it's a resource to you to give you ideas and to a little guidance and how to go about making an introduction to Tommy or me. And in this document, I've listed the websites that you'd want to know about. This first one is our consulting website, Premier Alignment. And I'm actually just going to open it up quick and show you the website. Well, I think I am. Well, here it comes. And this is a safe website to give to somebody. Well, it's sure taking its time. Tell you what, I'm just going to type it in directly. There we go. This is a safe website to give to any of your prospective referrals. And the reason is because when they go here, they're going to learn a little bit about what we do. There's 4 things that they can learn about how to save money with healthcare. But really what we want to do is have them schedule an appointment to learn about our consulting service. And when they click this book your appointment now button, it leads to my Calendly. And so they're going to set up a meeting with me. And one of the first questions I'm going to ask them is, how did they learn about us? Who referred you? And so if you are the one that gave them this website, I'll find that out and I'll tag you in our CRM so that you get credit for the referral should they happen to hire us for consulting. So I just want you to know about this website. It's a really good website. You should look through and familiarize yourself with it. But back to this document. So that's the first website that I put in this referral information document. The next one is aspirational healthcare, which is our model of healthcare that we help companies implement. And if you're a referral partner, you probably should review that website, browse around on it, and learn about our model. And then Oriat.com is our parent company, and our consulting service is one of 8 areas of focus that Oriat provides in the healthcare space. It's an amazing company, and one you should be familiar with. There's other services that Oriant provides, and as a referral partner, if any of your referrals hires us to do business and they also subscribe to one of our other services, you'll be able to earn referral commissions on those as well. The next website is Daryl Moon, who's our CEO and our key consultant. And if you read his website, I think you'll feel compelled to want to share his story of healthcare with the world because it's amazing. So I invite you to spend a little time looking at that. And then we have our YouTube channel. And when you click this link, here's where you go to. And some of you have seen this already, but we have playlists. And again, this is out here for anybody to view. And these playlists are organized as follows. There's a playlist about our model, a playlist about our consulting, a playlist about why employees love our healthcare model, and a playlist about why CEOs love our model. And then we have our strategic partner Q&A, which is a podcast. And if you click this, well, it'll take you to, I guess, the most recent recording. But you can also, whoops.
Welcome to our weekly.
Sorry about that. I'm going to turn that off. That was last week's recording. When you click on the podcast link, you actually can, what you'll do is you'll see all of our weekly meeting recordings here. So easy to find, go back and review, listen to the ones you missed, whatever. So I just want to show you this great resource because we have a lot of information on our website, so it'll help you as a referral partner. And then just real high level, here's the things that you need to know. We're a consultant agency, and we help CEOs implement a model of healthcare called aspirational healthcare. And this particular model leverages direct primary care to provide relationship-based front door to healthcare. And it reduces costs by 30 to 60%. And that's based on our actuals where we've consulted with companies. And Oriant is our parent company. And the term Oriant means to rise up with joy. And we help people embrace their journey through life with a better kind of healthcare that helps them reach their dreams. So these are all really good things that you should have in your mind as you're talking with people. And we have our contact information. So I'm generally going to be your first point of contact. If I'm not available, you can reach out to Tommy. And as far as making referrals, the best way to make a referral is to schedule a meeting with me and your referral person that you're wanting to introduce to us. And as far as the sales process goes, I'm the setter and do a little triage. Tommy is our closer. And so obviously we're going to have people want to meet with Tommy. What you can do is refer people to our website that I showed you, or better yet, schedule a three-way meeting so you can bring your referral person to the meeting with me, the three of us. And the way to do that is you can use that link on our Premier Alignment website. Did I close it? No, here it is. Yeah, you can just go here and open up my Calendly. And when you do that, you're going to put your prospect's name in as the name for the meeting of who's going to attend, and your prospect's email. But then click this add guest, and then you add your email here. So that way the three of us will show up at the meeting. And then you can fill in these other fields if you want with information about your prospect. And that's basically how you do it. And then I've put some information here about our target companies that we're most interested in helping. Our target audience is 50 to 2,000 employees. And the reason for 50 is once you get to 50, we can help companies self-insure. And that brings additional ways to save money. Now, we can still help companies that are already self-insured save a lot more money, and we can help companies that aren't big enough as you know, to self-insure, save money. But it's great if they're 50 to 2,000. That's when we're going to be able to help them the most. And the 2,000 limit is because when you get that big, then it starts to get more complicated. There's multiple levels of leadership, decision makers, just a lot more bureaucracy to implement change. We can help any size company larger, but it's best really to focus on these ones, 50 to 2,000. We've helped companies with as few as 17 employees. With that company, we helped them save enough money they could hire a whole new full-time employee, which for a company that size is huge. Of course, our commissions are based on the consulting fee, and the consulting fee is based on the headcount of employees. And so the larger the size of the company, the more commission that you'd be able to earn as a referral partner. I think I talked about that enough. So a good rule of thumb, this is important to know. Keep this number in mind, $9,000. If a company is spending $9,000 per employee per year, they really ought to be talking with us because we'll be able to help them save a lot of money. We get their cost down to $6,000 to $7,000 per employee per year, somewhere in that range typically. But companies on average are spending around $14,000 per employee per year. And that's what the companies are spending. In addition to that, the employees generally are contributing to the cost of their healthcare in terms of paying for the premium. And then, of course, when they show up at the doctor, they're going to have deductibles and copays to pay. And that's not accounted for in this number. This is just speaking of what the companies are paying for. I talked with someone yesterday who works in the finance world, and he said, yeah, he was helping a company, they were spending well over $14,000. Well, this is kind of a national average, might be a little less than 14,000, but that's a lot of money, especially when we can get it down to 6,000 to 7,000 range. And then the employees don't have to contribute to the cost of their health care anymore. That's huge because it helps the company save all that money, helps the employees save all that money. And then, of course, that's going to help the company retain their employees and attract new employees, which they're always, struggling to do, it seems, these days. So it's a win-win-win all the way around. Okay, so how do you go about making an introduction? Well, I put some golden questions here, or some lead-in questions that you could use. Again, these are just suggestions. You'll want to phrase it in your own words, but here's several to look at. Are you leveraging the savings of self-funding for your employee healthcare? I'd love to introduce you to a guy who's helping companies cut their healthcare costs in half with an innovative new healthcare model. Here's another one. I know a guy who's helping CEOs cut their second largest corporate expense in half by offering an innovative new healthcare model employees love. Or I know a guy who's helping CEOs double their profit margin by offering an innovative new healthcare model employees love. And this one, based on a rule of thumb, are you spending less than $9,000 per employee per year on healthcare? The average is around $14,000. And if not, I know a guy who's showing CEOs how to acquire employee healthcare benefits differently for about $6,000 to $7,000. So there you go. There's several ideas. And of course, you're going to ask the question, can I make an introduction? Can I introduce you to Bob? And then we'll go from there. But hopefully this is helpful. Like I said, this is these two documents I showed you are two of a number of documents that we have in our partnership folder, the shared folder. So if you've signed your referral agreement with us already and haven't had a chance to talk with me and get your folder, let me know. I'll be glad to have that discussion with you and give you access to all these great documents. And if you haven't signed your referral agreement yet, let me know. We'll send it again, whatever, so you can sign it. We'd love to have you making referrals and helping your associates out there in the business world save a lot of money. let's see, I need to, oh, here it is. I'm going to stop share. Yeah, so we'd love to be helping you, help your business partners save money and you be earning referral commissions. So let us know what we can do to help you with that. And with that, I'm just going to open it up. I see Steve has joined. And Steve, do you have any questions that you'd like to ask today while we're here? Let's see, we have to unmute you, Steve. I think I can do that. Let's see here. Well,
I'm,
there
can you
you
hear
go.
me?
Yeah, we can
Okay.
hear you now. Awesome.
Yeah, so is it just us three?
It's
On the call?
just us three, although we're recording it, so I do plan to send
Oh,
it out.
right.
And let me introduce you to Tommy. I don't think you've met Tommy yet. Hi,
No, I have not.
yeah, and Tommy, Steve is our newest strategic partner. So just wanted to make the connection here. Yeah,
No, nice to meet you all. I just have a couple of questions. I did get the referral agreement, so I'll get that signed today.
awesome.
So let me make sure I understand the process. So like I've already told Bob my wife's company she works for is a perfect target. Because her boss, well, the owner is my brother-in-law, and he's the right size, 60 employees. And my wife's actually manages HR for him, including insurance and medical. So anyway, so the typical referral then I would be setting the initial meeting up with in this case it would probably be I guess you and me, is that right? That's the
Yeah,
goal.
that
And
would be
that would be
great.
with, right?
Yep.
And it would be
Yeah,
you and me.
probably just a short meeting, like 15 minutes, whatever. Yeah, just
And
to
that
make
would be you and me
introduction.
with and probably with Bill, the owner, and the CFO, right? Maybe
Yeah,
maybe my wife.
that'd be awesome.
And do you prefer to do it in that one in person or by
Since
Zoom?
they're local, I'd be glad to do that in person. And if we do it in
Yeah.
person, then maybe we could have a more formal meeting where Tommy could join us. And if Tommy's not available, we could invite our CEO to come, Daryl Moon. Yeah,
Okay. And then
Yeah.
I was not clear on, let's say that, you present during that meeting the opportunity. If they're ready I guess move forward to the next step, how would that work? And I thought there was the group that does the actual analysis and recommendations for them. That's different people, right?
well, so we were going to have that initial meeting like you talked about.
Yeah.
And if they like what we are sharing with them, then Tommy's going to put together a proposal. And
Oh,
it's going to include what we do as consultants. So it'll be a statement of work.
hmm
And depending on the size of the company and what they're wanting to do, it might span, 12 months, for example, itemizing in each month what we're going to accomplish, the milestones, and how we implement our model of healthcare. And
So are you able to get enough information from that initial meeting to come up with a proposal, or do you
yes,
have to follow? I mean, is it like number of employees and total spend today per, and is
yeah,
that
we're,
is
we're
who they're
yeah, we are going to want to know what their spend is on their
Mhm.
current employees, and we're going to need to know the number of employees, especially like how many are currently covered by healthcare and what they're
Okay.
spending. That will be helpful. Yeah.
And then do you at that point if they're still, I mean, obviously you haven't given them the proposal yet, but the proposal would show them not only the what you would do and how, but the cost as well as the ROI.
Right, including our guarantee, because our guarantee is that we're going to save them more money than our consulting fee costs, right?
That's guaranteed.
Yeah,
Mhm.
and if not, we give money back. Yeah.
Okay, so I'm trying to remember what you told me the typical fee could be for that size of a company. It could be somewhere between what 50 and 100,000. Is that right?
Well, it's
Or
going to range dramatically to based on the number of employees, but also it may vary a little bit too based on that discussion we have with them, what they want to do and
yeah.
how fast and things like that. So yeah, I mean, Tommy's going to take everything in our discussion into consideration and putting together the proposal.
Okay. And is there a deck then in this first meeting that we would present to Bill, if I, and my, you know, the CFO. So there's a deck that would show kind of what you just went through. Do you have that to share? What kind of,
Yeah, that's in the folder. So when you
oh, it
send
is?
your
Okay.
document, then I'll schedule a meeting with you to go through that. And so you'll have access to that deck. And yeah,
All right. Yeah, he's gonna, obviously they're pretty smart people. Him and the
sure.
CFO are gonna ask the typical questions, right? What, you know, how is this gonna, you know, because they're like most companies, they're using, I think, Select Health right now, and you know, every year, at this time of year, they have this kind of a, it's, they have a consultant. I don't really understand it fully, but they have a firm that helps them a lot. Like they don't have an on-site attorney, for example. So if there's legal questions, they reach out to them.
Sure.
If there's HR issues, but I don't know what's the same company, but somebody else does the same for the healthcare, and they come out every year and they, you know, what their pitch is. We do all the research for you. We look at all the different options and maybe switching to somebody else like Cigna or Aetna. And then here's what we recommend.
So Steve, I'm not sure if it's at your end or my end, but there's like 30 seconds that I missed of what you said. The last I heard was
Oh,
Cigna or Aetna.
Oh,
yeah,
can you hear me?
I can hear you,
I
Tony,
can. Yeah.
Okay.
Can you hear me okay?
Yep, I can hear
and
you. I got it.
I can hear you
Yeah,
again now
All right.
too. It must have been
okay.
my end. So
Okay, sorry.
Yeah, perfect, not a problem. So, because they're with Select Med, I can give you an example of a company that we helped with Select Med. So with Select Med, they have and a couple of different insurances here in Utah. So the issue is that we have been geared and formed as CEOs. My background as a CEO, I've owned 5 different businesses. That you hire a broker and then you get quotes, and then you either have quote A or quote B. And I'm sure their broker is amazing, and I'm sure their broker's doing a really good job as far as like investigating on which one
Yeah.
of those are good for you. But how do we actually bring in option A plus other preventative options? And how can we provide A and maybe C and provide them together? And
Mhm.
a lot of times in this industry, we're so conditioned to just be like, I have to choose one path and that's it. And that's actually not the case. And one of the things that sets us apart is we show you how to navigate so you can build a custom system for your employees. So if you have an employee that would like to take part in if your employees that are younger and have no medical issues have expressed interest in taking part of a sharing program, well then how do we offer a sharing program plus Select Med? So these are the ways that we're different. But the bottom line is we'll work with their CEOs, I mean, with their broker, or we'll bring in a broker that's willing to work with us. But we're not a broker. We're not going to come in and just do the same thing that this company's doing. We're going to come in and teach them how to challenge that company a little bit and how to twist what they're currently offering their employees into something that's more preventative and relationship based, so that it says across the whole company, we care about you and we want you to be here and we want you and your family to be healthy.
Yeah, I'll just, I don't do, how much time do we have? 5 minutes? Can I don't know if, can I share a little bit about what they're doing, see if it fits the model?
Yeah, absolutely.
Okay. So first of all, Doug, he's very successful. He married my sister. That's the truck. They sell trailers. The big,
Okay.
you know, in the trucking industry, transportation, they don't sell the trucks. It's all they do, the trailers, you know, and refrigeration units. It's all, and Bill's been very successful because he takes care of his employees first and his customers. And I shared a few examples with Bob, but he has, you know, he's grown from a small little trailer that he started with probably 20 years ago to he has a huge 2-story building with something like 12 bays in the back because they also do service for the trailers. So if they're damaged, they do that, and they also have parts. And in addition to sales, he has his own leasing business as well. So he's fine-tuned this over 20 years, and they're making a lot of money. And he really does try and take care of the employees as well. The customers always come back to him. He has very low, attrition because of that. And the same with the employees. Now on the healthcare specific, I know because my wife's HR and she's one of the employees. He's always trying to do unique things. This would be one of them, right? To help out and for retention, so they won't leave because someone's always offering these guys more money, right? He has mechanics in the back, he has installers, he has part salesmen, he has regular salesmen. He's got a front office team of about, I don't know, 10 plus a CFO. But so today what he's doing on healthcare, he pays 100% of the cost for the employee. So like my wife is on that plan now. She hasn't paid anything for herself. And I wouldn't say it's the best plan. I've had these traditional plans in my career, like with Cigna and Aetna, and I work for Visa. And although they continue to cut them down, but they were really good. Like, for example, I had surgery 10 years ago and I didn't pay one dime for it. I mean,
Right.
But anyway, I do know that. And well, there's a lot of family involved there too. Like both of his 2 sons work there, and then the 3 daughters or the 2 daughters, their husbands work there, right? So, I know that, for example, the oldest daughter, her husband works there as a salesman. She's not happy with the insurance plan because they have 3 or 4 boys, and there's all kinds of medical claims. And I think Lorraine told me that they're going to introduce like another deductible. And I'm sure my niece is comparing this to her friends, and orthodontics is another one that came up. I think their payout is 1,000 maximum, and I think brace orthodontics is now like 4,000 or 5,000 or something like that. But anyway, I know they're not pleased. They don't seem to have a lot of options, and other than he is paying 100% of the premium, but the plan doesn't seem to be a very good choice. And they have it's a truckers association group that they get together once a year. They have meetings and they kind of share ideas and things, and that it may be tied into that. I don't know. But that's currently the process. And another challenge they have, my wife was telling me last night, a lot of these guys are, the mechanics, for example, these are blue collar guys that some of them don't even hardly use their computer. So they have to handhold them. She has to help handhold them and get them signed up. There's lots of questions about, well, how do I add, this new dependent, or, oh, that's the other thing that's unique. So on the kids, I don't know, it's always been this way, but he's currently, if the dependents, the children are 18, I think it's under 18 and under, he pays for them as well. So he's really, except for he's not paying for the spouse, right? Or the partner. So he pays for everything except for the spouse. So in that example, he wouldn't cover me, but all of our kids. But again, I don't think the plan is really the best. It's a typical, I think 80-20 plan. I think there's very low copay or zero for, routine visits. Might be $20. I don't know. But I think they're limited on who they can go to, and I don't know all the details, but and I don't know how much they're spending either. So anyway, that's at high level what they're doing today.
Yeah. So without peeling back the curtain and giving all of our secret sauce away, because we are a consultant firm and that's what our benefits are, right?
Mm-hmm.
There are a couple of different solutions I can see that we would already come in. And one solution would be concierge doctor, where all of a sudden the copays and the deductibles and everything would just go away. So they could go see their doctor as much as they want. And if most of these guys are in Utah, they could actually see their doctor right in their home. Like their doctor would just come right to their home. So then they would have to leave with
Oh, you
kids
say
or whatever.
the doctor could come to their home as well?
Yep. And the
Yeah,
costs are,
These are
and
all
the co-
100% all here in Utah. He doesn't, they
yeah.
don't- yeah.
So there's a solution, and this is where our secret sauce comes. So there are 50,000 solutions, and your broker will only bring the insurance solutions. Well, what if he said, "Hey, you guys, I know that they're getting slimmer and slimmer on medical, and so let me for $150 for your whole family. Your doctor will come. Not only will he come, but he will come right to your home. All your subscriptions would be covered, all your visits would be covered, your physical therapy would be covered for $150 for your whole family, because that's how much I care about you. And if you still want to go see your regular IHC doctor, that's fine. You just have to pay all the deductibles. And just to have that option for the family is like huge.
So,
And so that's just one solution. And I'm not saying that's what he would want to do, but that's one solution that his broker, if I was to tell you that and you were to tell your wife and he was to tell his broker would be like, oh yeah, we could do that for you. But why didn't the broker bring it up at the beginning?
yeah.
And that's what we do. And yes, this would be the perfect company. One of our clients is Clegg Auto, and it's a huge auto. You probably know Clegg Auto if you're here in Utah. They have several locations.
Yeah.
Yeah, so they're
That mostly sales or
automotive, and they fix cars like when you crash.
repairs as
They
well.
Yeah,
Okay.
the repairs, remodels, fixes, that type of stuff.
Oh,
But
okay.
Kevin Clegg over at Clegg Auto just absolutely loves this program because and he actually didn't come on board all the way on our full consulting. He just said, okay, all I care about, I looked up Orion and I know Orion does coaching, so all I care about is coaching. And then he came back and said, wait, the coaching changed the dynamic of my employees and the things that were going on in my company so much. Tell me what this consulting part is. And so we went in, because he said, but I'm not saving any money. It's like adding money, right? Because all we did was add coaching. Tell me what this consulting part is. And then we came in and we consulted him and showed him how to save money. But
So
it's not about offering. It's not about offering. It's not about coming in and taking away the insurance company. It's
Yeah.
about offering the choices that resonates with your employees. So if I'm 20 and I'm healthy, and hey, you could either go with Select Med or you could go with a sharing program. And by the way, it costs me as an owner $1,200. So if you go with a sharing program of $300, I'll give you $300 to go with that sharing program. Well, now I'm still 100% covered. I can go to any doctor, any hospital I want to. If I ended up having surgery, I can go to any surgery room. They just pay cash for it. And then and then I love my employer because he gives me $300 on top of it. But I can't do that for all my employees because you have to have 0 pre-existing conditions. So what happens for the employee that already has conditions? I have to be able to offer Select Med. So these are just, without pulling back too many of the curtains, these are the issues in insurance right now, where not having a neutral party come in and have these discussions with you, the owner thinks, I have to do one or the other. Which one is my employees going to like? And we come in and we show you, no, you don't have to do one or the other. You can actually do both.
Oh, so
And
that
this,
is an option. They could continue if they wanted to and
Yep.
offer both as
We
an
just bring
option.
more choices.
yep,
Well,
you just
that would
bring
be
more choices.
maybe
And
for the
by,
first, yeah, that's that,
yeah,
maybe for the first year, I both because, well, I'm just thinking out loud. I mean, some of the people probably like it, but I know there's others that don't. And by the
yeah,
way, I forgot to mention, he does like, for example, if an employee's spouse, covers them and then he doesn't have to pay for it, it saves him. I think my wife said 900 or something for the employer, maybe 1,200 his cost, but he gives that person 300 every month.
yeah. So it's the same kind of concept.
Yeah.
You can offer both. And for the people who want the Select Med, great.
Mhm.
For the people who want an alternative,
Yeah.
great. But between the two, he's going to lower his overall cost. And this is just one. I want to be very clear. Don't give him this solution, because we have to come in and actually, I mean, you can
Yeah.
give him this example, but this is just one of 1,000 solutions we
Right.
could
That's
bring
not,
in.
that wouldn't necessarily be your recommendation.
Right. So what we
Until
would
you
want to
know,
do,
you
We need to
would
talk with them and
implement
find out what their
Sure.
yeah, so I would
objectives
want
are.
to come
Yeah.
in and I would want to talk about the issues, like the issue you just said, and I would want to say, okay, here are so the very first thing we do once they agree to come on board and hire us as a consultant is we do a deep dive audit of what are all your employees saying. And the other mindset that has been, and like your wife said, as an HR person, like I'd love to have her on this meeting, because for her, she's like, okay, I just have to make the majority happy. What
Well,
if
yeah,
you
it's
don't?
interesting. Yeah, it's interesting because
What if you
this is-
don't? What if you could bring in enough
Yeah.
choices to make everyone happy?
well, so they all have a different opinion, I think, right? Like, so again, Bill, the owner, his number one concern is his employees. Well, and his customers. I don't know which one's more important to him. I don't know. They're equal because yeah, you can't have a successful business without having good employees, right? And
Right.
vice and the customers, obviously. But
Right.
so I think, yeah, you mean they all have a different perspective, right?
Right.
My wife's gonna say, well, I'm on the front end and the back end, and the challenge she has is that this is like an old school business. It's not like eBay or the corporations I work for where you never speak to some in person.
Right.
Right.
And so one of her concerns is going to be, well, that sounds great. And I knew I could do this, but I don't want to pay for 10 bills. Well, guess what? You don't have to. There's now a TPA that allows all of this to come into one bill, one simple. This is the whole reason why HR people have gone with the insurance companies only and not looked at it, other ways of doing insurance, because doing their benefits, because they don't want to, like, she has enough on her plate. She doesn't want to track 10 bills, 20
Right.
bills. But
Yeah.
just recently, in the last couple of years, because of the law changes and the transparency laws coming out, there have been some new TPA programs that have come out. TPAs are like what runs through the billing and takes from the payroll and everything.
Mhm.
That all this is on one. It's just as easy as paying your regular bill that you're paying right now. You
Yeah.
can do an a la carte, bring in all the solutions, but have one bill. The TPA tracks everything for you, and at a click of a button, the moment the employee says, you know what, this has been great, but I want to go back to Select Med, great, we'll just quickly switch it. Or, hey, you know what, I was talking to one employee and I just found out that not only did they get their surgery paid for because they did a profit sharing, but their deductible, once it's paid for, that's it. Like 5 years later, they still didn't have to pay another deductible. How do I get on
Oh,
the sharing
so it's not
program?
an annual deductible, it's lifetime?
It's the deductible is per incident.
Oh.
So we have a client who was not in a pre-existing condition. I need to be very clear that decided to go with the sharing program, got cancer.
Mhm.
They took care of it, and to this day, I think that was about 4 years ago. To this day, he still doesn't have to pay a deductible when the cancer goes into remission or when something happens, because it's a deductible per incident.
Okay. So just two more quick questions. Is it, would you address medical, dental, what's the other one? Medical, dental,
Mental health,
huh?
PT, mental health,
So we
PT.
do.
Mental health, yeah. I mean, because
Yep.
that's becoming right. So I know those from an employee's concern, and Bill knows this because he has his own family. Does it cover? You guys address all of those? And
Yeah, one of the best things about our mental health is, and I love telling this story, is we talked about it in the Resilience Pro video, actually, Bob. So if you
Yeah, a
if you
couple
get a
weeks
chance
ago.
to, yes, if you get a chance to send that to Steve, you should. But because you can just send, and because you can use that video, Steve. But basically, we had, so our preventative health, they meet with a health coach once a month. They go over everything that's going on in their family and whatnot. And then if they're in an emergency health situation, so this is for all your employees. So no
Right.
longer does the employee have to consider like, hey, I got to call this number and I hope none of my employees find out. Everybody just meets with a coach. And so everybody's talking about how their coach is helping them. So it's no longer a stigma. And
Mhm.
then by any chance, if they need to go to somebody like a psychiatrist or something, we actually partner with Bloomberg, which is the #1 mental health psychology coaching in the world. Like they do military, they do all sorts of stuff. Like they are one of the #1 in Bloomquist. And they are our partners. They actually own part of Orion. That's how they're one of our partners. So their owner owns part of Orion. And so we send them over to them to talk to, so they talk to a mental health therapist on a regular basis on a preventative matter. If it becomes more than preventive, we request them to Bloomquist. Bloomquist triages them and gets them back on track, whether they need medication, whether they need to be seen in person, whatever needs to happen. And then the report that the employer gets is, hey, 20 people saw 20 people saw the mental 20 people saw their coach today. 3 people went over to Bloomquist, but they don't know who it is.
It's just
They don't know.
numbers, right? Yeah.
It's just numbers. And so they see, oh, 3 people needed real help and 20 people right now are keeping their mind healthy and keeping their emotions healthy. And the story that I love about this is we had one employee that had a wife with cancer. Well, he didn't feel like he could tell anybody his problems. Like he's going through chemo, he's going through cancer treatments. Mother-in-law's worried, kids are worried. Like he couldn't go home and talk to anybody about how he was feeling.
Yeah.
So
'Cause
he got on,
he's part of the process, obviously. He's affected
yeah.
mentally.
So he got on the phone once a month with his therapist and talk to her about how he was feeling and how
Yeah.
this was affecting him. And then he'd go home and he'd just be with his wife and kids and be the support that they needed.
Yeah,
Well,
that's the way it should be. So that's
yeah,
good.
yeah.
And
And then what happened was when we went to do our once a year survey, we asked him how he liked it because
Mhm.
we do CQI. Just so you know, on any process that we put in place for the company, we put in place CQI along with it, continuous quality improvement.
Yeah.
And when we asked him, how do you like this? He goes, if you remember correctly, what, because it's the coach that does the survey, right?
Mhm.
He goes, what I went through. And if you remember correctly, I got mugged on the side on the subway. And he goes, I would have lost my job. I know that the only thing that saved me mentally from getting after I got mugged on the freeway on the subway was that I was already talking to you and I knew I could pick up the phone call and talk to you about the mugging.
Yeah, that's a great example because you're right. Most people don't know what to do.
Yeah. And
Yeah.
most people don't think about the preventative. Like
Yeah,
he
that's true.
didn't have anything mental going on. He just needed somebody to talk to because his wife was the one that was going through
Sure.
everything, but
Yeah,
he didn't feel like he could
that's awesome.
share. Yeah.
So, okay. And then what about so how does the guarantee work? You come up with a proposal and that's part of it. You say,
So the
we,
guarantee, what we do is we look at like how efficient has your broker been so far? Because I'll be honest with you, some of these brokers, they're catching on to this. They know that the world's about ready to change, so they start bringing some of these solutions to their to the employee, which is great. We encourage that. Like, hey, hallelujah, right? So let's say that they're super efficient. Well, then maybe the only tweaks that we can do is going to create a 20% savings. Well, then we will bid or quote based on a 10% savings because our guarantee is that we're going to do double what we quote you. And then we're going to give 2 types of pricing. One, just a flat fee and you're done with us. 2, where we just share in the profits for 2 years.
Okay, well, that's nice. You give them 2 options. So that you would, in that example, the 20K is the guarantee, but the quote would be, I guess the actual amount would be 10K, but you would double that if they Is that right? Did I get that right?
So in this case, if we're doing it in numbers, let's say the quote would be 20K period, and we guarantee to save you 40K. If you want to do
So let me make sure. If the quote's 20K for what you're gonna do, and the guarantee is double that, 40?
yeah, because if you remember, I gave a percentage before. I said 20%. But if we're doing numbers, let's say
Oh, okay.
20K, we're going to guarantee we'll save you 40K.
Well, yeah, so
If
maybe 20K is 20% of what he's a savings, but you're
Yeah, so let's say 40K. Let's say that 40,000 is 20% of his savings.
yeah.
Then we would bill him 20K as the first option. At
Mhm.
flat fee, would guarantee you 40K or more in savings. If you don't see it, you don't see it.
Okay.
Or we come in and we do like a 5K startup fee because we want them to have some skin in the game, because we have learned that the broker will challenge us, and we just want to be in those meetings with you, and you paid us to be in those meetings. And then it's very amazing what magic can happen just having your own consultant in those meetings.
You mean
Um,
with their other broker?
Yep.
yeah, with the broker. Yeah, with the
So
broker.
you would prefer to be in that meeting? Well, and the reason
Oh,
I'm thinking, because I mean, as you guys know, a lot of these, I don't know if all of them, but a lot of them are doing this now. I don't know why they do it all in January, because everybody then has to deal with it. But
yeah.
I think in fact, I know they've already started, because, I was asking my wife about this last night. So they haven't like given the numbers out to the employees, but they're already getting ready to, right? They're going to announce it pretty soon. And I think what Bill has been doing, like a lot of CEOs, the costs always go up, right? And I remember when I was at eBay, they said, "Oh,
Right.
our costs, the healthcare costs continue to rise, and our costs have gone up by 15 or 18%, but we're not going to pass." One year they said they were going to take it all on themselves. They didn't pass. They said they didn't pass any of it on. The next year they passed on only like half or something, right, of the cost increase. But I think what they're doing is they seem to be continuing to reduce the actual benefits, um, even though the price has gone up supposedly, and or offering things that are really not of any value that they claim are, expanding. So I don't know. It's as an employee, I mean, you guys have been employees too. It's pretty frustrating that you have to worry about this, and obviously, especially, in Utah here, all of these people live in Salt Lake County, a few in Utah County, and then, up in like the Farmington area. But, they have, I go back to my niece. One of her sons this year was diagnosed as a type 1 diabetic. And so there's all these additional costs and things that they are dealing with now, right? Because it's been a huge impact to them emotionally and medically, both for him and his family. Learning how to deal
Yeah.
with this. I mean, was an athlete that played baseball competitively, and now he's got so anyway, that's the kind of stuff that well, I heard one more question I did have too. What about pre-existing? So like that's an example. He's already type 1 diabetic. There's going to be obviously costs, and I don't know what they are for, insulin and other things. So, or cancer. I know.
So yeah, so I'm just gonna be like, so the the issue, Steve, is we could be on this phone all day long, but the more that I unveil, the more questions you're going to have. And
Mhm.
this is exactly what we do. This is exactly why we sit with the company for a year, and we help dissect all these things that you're talking about. We take all of them in consideration, and then we put them in a better position than where they're at right now, for the employee, for them as a company, while and we do that by having these conversations.
Yeah.
And so, like, I don't want, like, I know your head's just spinning, but it I think the biggest thing to understand is nobody is consulting the HR person or the CEO and CFO that doesn't have skin in the game with the insurance company. And that, because even if I was a rep of a sharing, like, let's take the sharing insurance, for example.
Mhm.
If I set up a sharing program for you, I get no dime out of that. Like, I'm not bringing up that solution because we're a broker of sharing programs. We
Yeah,
aren't.
yeah, that's it.
So yeah, like, we're not an insurance broker, we're not a sharing agent broker. And I know people are always like, well, what we do is if you do want the mental health piece, we can put that together, and that's where we make money with Orion, our parent company. Orion's a coaching program. So
Mm.
just to lay it on the table, if there was any self-interest, it would be if the employer wanted coaching. That would be our self-interest. We would suggest and probably gear him towards Orion coaching.
So
But
one more quick question. I know we're probably over time, but see, I'm
no,
just
that's
because,
okay. But with that said, anything else we would come in with, we have no financial ties to. We
yeah,
would literally be the warriors for the HR and the CEO.
yeah, you're not making any money on it. You're really trying to benefit both him and his employees, right? The cost.
Exactly.
So with the timing, is this something that you would, in that exists example, where they're making a decision now for 2025? Would you want to, would you think it'd be better to move quickly, or how long does it take to go through your process, right? To get to,
So yeah, so it depends on when their renewals up. If
yeah.
their renewals up at the end of the month, then for Select Med or whatever they're going with, Blue Cross Blue Shield, whatever,
Mhm.
we would say just move forward with the best deal.
Mm.
And we would still advise them to bring us in, because what we can do is we can say, okay, you just experienced your insurance being raised because your employee had diabetes.
Yeah.
We can put a program in together that helps them manage that diabetes, so that you actually look better when your renewal comes up. So some of
Oh,
these
I see.
things we can put in place during the year, so
Yeah.
that even if he's like, okay, I don't really want like working with you as consultants, he now knows how to lower his insurance cost,
Yeah.
because we can bring in some programs and some preventative measures, and we can say, here's what you need to look at in order to help navigate some of these chronic conditions, so that they're manageable. And therefore, by being manageable versus constantly raising because they're in the hospital or because their medication keeps changing or whatever it is, right?
Mhm.
That's what raises your insurance. But if it's manageable and the cost stays the same or goes down lower, because we're teaching the employee and their family what to do on their end, then in some cases the insurance can actually come in at a lower bid.
And yeah, so
So
a lot of what
basically,
we do, Steve, is where we were bringing an add-on and giving the
Mhm.
employees more choices that they can start to implement right away anytime during the year. But the other thing is that too, open enrollment might happen once a year, but you can also back out of a lot of health plans during the year
Oh, I was going to ask you
if
that.
you choose to do
Yes.
that.
The
So
employee, is that the
Yeah.
employee's choice or the company?
a company or employee, we'd have to, I mean, it might be different for each plan, but there's
Mhm.
often
So
there's
they
those options.
could, if they wanted to, possibly, let's say they renewed with Select Health, generally
Yeah.
as their provider. You're saying they could get out and
Well, I
maybe,
don't know
Well,
about that
if they
specific
want
example,
to,
but
yeah, if they want to switch, like,
yeah,
let's say that we came in and we consulted them, and we said, okay, you love Select Med,
yeah.
but but here are some of the issues. So we're gonna set up a program, and this program would actually do Select Med Medallion. Well,
Mhm.
Select Med Medallion is technically switching insurance, even though they're still within the
Oh,
IHC
yeah, I
group.
see what you're saying.
Yeah,
You're
so there's
advising
things
them.
like that we can do. But once again,
Yeah,
it's like I said, the more we talk, the more questions we're going to
yeah,
have. Like,
right.
it's literally just remembering that your broker may be working really hard for you, your insurance may be working really hard for you. We're not here to debate that. We're here to say, but whose interests are they aligned with, and
Mhm.
who are you, who's on your side to really show you different ways of purchasing healthcare benefits.
Yeah, I don't think any of that's going on. I don't, based on my understanding, I think they're just, every year they get the recommendation and, you know, they may come back and say, well, you know what, I think they actually did this a couple of times. We're recommending that you switch or that you
Yep,
opt for
yep,
these other options, right? Because it'll save you money. So
yep. And you know what's so sad is larger companies like Walmart, they
yeah,
pay for a consultant like us.
yeah,
We're trying to hit these smaller companies and medium companies because they need it just as much as Walmart.
yeah,
But I was talking actually as the Costco guy that we were talking to, but I was talking to the Costco guy and he was like, yeah, one of the things that our consultant, now keep in mind, you got to think of what a jumbo company they are,
yeah,
is the consultant came in and said, okay, we're guessing that you're going to have this many um, heart pacemakers. So why don't, no, it wasn't that. It was something else. This type of surgery. You're going to anticipate that you're going to have this type of surgery. So if you prepay for the surgery and when it does happen, have your employee get it done at the Mayo Clinic, then it will save you this amount on your insurance in the back end. Those
mm,
those type of conversations are happening all the time and with jumbo companies, but nobody's helping the smaller companies.
yeah,
And
yeah.
that's what we're here for.
Okay.
And
Yeah,
when
makes
we
sense.
say aspirational model, it's because, well, while we're doing that, why don't we just make it preventative? Like, why don't we just make
Yeah,
sure that your employees don't have a deductible with their doctor so that they find out when it's insulin resistant instead of full blown diabetes too.
yeah, yep. Yeah, those are all good points. I think you know, I'm just thinking like not knowing Bill, he's gonna have a lot of questions and obviously you
Oh
guys have
yeah.
done this before and I think the guarantee really helps. I'm sure you have some like references or you know case studies. I like that it's you don't have to go all or nothing, and I like that it's preventative. I think you know one thing that we probably can talk about it later, but is like employees having choice, right? Because I know for a lot of people, they're willing to pay more
Yeah.
monthly if rather than going with you know the HMO plan like in California. What's the name of that company when I was in California? The big HMO out there. What's it called? Oh,
Kaiser?
anyway, Kaiser. Because you know if you have Kaiser, you literally just you can go to a clinic, but you have no choice on the doctor. You can't make an appointment with Dr. Smith because you like him. You know,
Yep.
and so your costs are lower, but that's not very good service, right? So when we were there, we paid extra because we wanted to have the choice, right? So
Well,
as
and
long
what's really great is like is that that's actually one of the choices that we can bring in. There's actually an insurance company, believe it or not, that and once again now I'm going. This is why the more you ask questions, the more we have for you. But just
yeah,
so you know, that's one of the things. Like if he said, "Look, I just want my employees to be able to go wherever they want to go," great. Let's give one option, Select Med, and let's
yeah,
give this second option this cash only insurance. So we have a cash only
yeah,
insurance where they give you an insurance card. You say, I'm a cash only customer. And by saying that, by willing to say that, they pay the cash price, they pay everything up front, they don't go through regular billing. And so you can choose any doctor. And guess what? That company was created by a couple of doctors that were tired of
yeah,
people not being able to see the doctor they wanted to see.
yeah, yeah.
And
And the cash pay fees are a lot less expensive than going through insurance.
Well, I
yep,
think the key here is that you guys, you know, you're the experts in this field because you've seen this. And you know that Bill obviously is not an expert in this, and he just wants choice, value, and you know, I mean costs. Just so you know, I mean, actually, this last year I think was the first year that they in a couple of the areas they weren't profitable, but overall. You know, like you remember that PII, what was that loan that you could get when during the COVID that everybody could get?
Yep.
He could have gotten it and he didn't take it. Because,
oh yeah.
right. I mean, you know, he's so but actually, you know, it's starting to affect him.
Just a good guy.
Oh, I lost the sound there. Sorry.
Yeah, I think Tommy's a little out of range, maybe.
Yeah.
So-
All right.
Well,
Well,
let's get a meeting set up. And
yeah. Okay. I
yeah,
think it'll be a good for me especially to learn, and also for Bill. He's a perfect candidate, and I think as long as we give him choices and
And
can
the
show
great
the
news is-
value.
yep.
Well, and the great news is because we're here in Utah, all
Yeah.
the customers that we started with are here in Utah. So it's perfect for references and everything.
Yeah. Yeah. Okay.
All right. Well, this has been a great conversation. So I'm glad you joined, Steve, and thank you for your
Yeah.
questions. And that's been
Sorry,
awesome.
I took over half of your meeting, but
No, that's
I'm-
what we're here for. That's
No,
why
that's what
this
we're here
meeting every
for.
Friday.
Yeah,
We'll bring
sometimes
some more
we have
questions next week.
okay. All right.
Alrighty. Okay, well, thank you. And we'll meet next week again at 1:30 Mountain Time, every Friday. All right.
Hey, thanks.
Take care.
Okay,
Thank you.
thanks.
Okay,
Mhm.
bye.
Yep.
Bye-bye.
Bye-bye.